If the only way you've been told you can buy real estate is paying more money to the IRS, you've been given bad advice. Business owners don't need to make more money on paper. They need the right strategy. In this video, I'll show you how entrepreneurs are buying real estate using business income without sacrificing smart tax write-offs. Thank you guys for watching. I'm excited to dive in with regards to this topic. Me being a business owner myself, this hits home for me. Being a part of a bloodline of entrepreneurs where they worked their butts off to grow their income, impact, and serve their community. Why should that hard-earned money go to Uncle Sam to qualify for real estate? We're gonna dive into the truth about business income and real estate. First off, the lies you self-employed folks out there, you freelancers, entrepreneurs that started their own business out there, that paying more in taxes will allow you to qualify for more. Conventionally speaking, perhaps yes. They go based off your tax returns. The traditional banks, the traditional lenders go off your tax returns, and hence a lot of that information out there is claim more in taxes. Conventionally speaking, that is true, but there's other solutions out there that allow you to not have to do that and buy real estate sooner and more efficiently instead of having to wait and follow these tight boxed guidelines, okay? This advice specifically punishes the smart business owners because they end up not writing off so much to be able to qualify, traditionally speaking, and claim more income on paper. But instead, they should be utilizing a bank statement loan, as we're going to go through to today, to be able to leverage their income into real estate, pay less in taxes, and further diversify their wealth and grow and build generational wealth. Okay, so sending all that money to the IRS to claim more money on your tax returns is actually like punishing you guys so much out there, and I hope you stop listening to that advice and we could perhaps have a conversation. Check the description. We can set up a Calendly. You can DM me on Instagram too, okay? Another lie you've been told is that the W-2 rule applied to non-W-2 people. These traditional loans, these government loans, conventional FHA, USDA, VA loans, they follow all these tight rules, more so for W-2 employees. You as a business owner shouldn't have to follow similar rules and all these tight guidelines that make you end up paying more to Uncle Sam just to be able to qualify for a home you desire. I think it's nonsense. And I truly feel more and more people coming to me to talk to me about this for other solutions. If that's one of you guys out there, would be honored to help you do that. Bank statement loans, profit and loss loans, 1099 loans if you're a freelancer. These certain loan options will allow you to buy a primary, a second home, or even investment property. So don't listen to these lies that have been this misinformation that's been out there for you guys that are business owners and self-employed out there. Secondly, why tax write-offs aren't the enemy. Okay, so write-offs don't necessarily mean you're broke. They actually mean you run a real business. You have expenses, you depreciate, you write off meals, all sorts of things depending on what business you have and what business you run. That's actually a smart tactic. I know a lot of CPAs and tax strategists that allow you to be able to leverage the tax system that's literally written to help the people that make a lot of money in businesses, that own businesses, become rich. Okay, this is what the rich of the rich do. They don't claim money on their tax returns to buy real estate. And I hope you guys don't anymore as well. There's solutions out there for you. This disconnect between paper income and real cash flow based off a traditional loan and non-traditional loan is skewed pretty far. I feel I've been having a lot of conversations. People are starting to realize that there's other options out there. But this disconnect between paper income versus real cash flow in a business is real. I've talked to many business owners, me even being one myself, as well as my twin sister. There's a massive difference between what people say they make on paper and what the actual business income is that's coming in, okay? Traditionally speaking, for a conventional loan, that paper income is going to have to be high if you truly want to buy real estate, invest in real estate for a property that you desire. If you claim $20,000, $30,000 on your tax returns, yeah, you can get a conventional loan putting 3 to 5% down, whether you're a first-time home buyer or not, with a better interest rate than a bank statement loan, profit and loss loan, or 1099 loan. But you're not going to afford much with that $20,000, $30,000 in net income on tax returns. Okay, so to be able to afford a home you desire, invest in a real estate at that conventional realm, you have to claim a lot of income. Lots of money you're going to be going to Uncle Sam, not to mention we average 2 years, and you'll have to be in business for a certain amount of time. We'll have to have 2 years of tax returns actually showing sufficient income. So that's why I believe utilizing the real cash flow of your business as opposed to your paper income is very, very crucial and imperative. And I want to get this information out there to all of you guys, business owners. Thirdly, how business income can still qualify. Okay, so I mentioned it a few times throughout this video, is bank statement loans are essentially, instead of seeing these government speculated forms through tax returns, bank statement loans were literally looking at your legit business income and deposit flow month over month, and we averaged that over 12 to 24 months. Okay, there's no W-2s, there's no tax returns, there's no pay stubs. We're not fitting these very strict income calculation guidelines like a conventional loan. We don't need your Schedule C's, your K-1s. Are you a sole proprietor? Are you S Corp? All these different ways that they calculate this income to fit in this box to really see what you qualify. We can simply average your eligible business deposits and cash flow over a time period, okay? It's deposits versus tax returns. Which one do you feel is better for you as a business owner? Which one do you feel is you're able to have more leverage when you decide to get in the market to buy real estate, diversify your wealth, and build generational wealth for you and your family outside of your business? Okay? So with these loans, cash flow matters more than reported income, which is crucial because a lot of business owners, me included, and a lot of people I know and a lot of business owners and self-employed folks I talk to, is they make money. The cash flow is coming in, but it's not necessarily reported the way the government wants you to report it. I'm not saying, lie. I'm saying, guys, your write-offs. Write off as much as you possibly can. That is your hard-earned money that should go in your pocket. And then be able to utilize a loan product like a bank statement loan to further leverage the tax system to pay less in taxes, but then still have the ability to invest in real estate. Okay? And fourthly here, who this strategy is for. So this strategy typically serves entrepreneurs with strong revenue, okay? Self-employed borrowers, freelancers, 1099 workers, investors, business owners with strong deposits but heavy write-offs, business owners that like to maximize deductions. I'm one of them. I know a lot of people that are, a lot of high-level business owners that try to maximize everything they can in terms of deductions. This is your path to real estate ownership through these non-traditional programs that I've been going through, that I've been really educating within my platform. So continue coming back, watching, share this with a friend, a business owner, self-employed friend that you feel this could benefit, who's really looking to, leverage their income and buy real estate, offset taxes in that regards, but also just in general invest and buy real estate. Okay. Whether that's your primary, second home, or an investment property, this is doable for you. What really holds people back is people out there, business owners out there, believing IRS income equals qualifying income. Okay, so how to fix that is talk to me, DM me on Instagram in the description, or set up a Calendly call with me, because we can actually qualify your income off deposits and not your IRS income. All right. Another thing is what holds people back is not preparing bank statements properly. A lot of people like to commingle personal and business bank accounts. I recommend if you have a business, start a business account and have all your business income going in that, even cash. Being able to show those deposits can allow you to have more qualifying income and have more purchasing power for real estate that you desire and that you really want to invest in. Okay, so sometimes commingle these personal and business bank statements, but it does get tricky and there's some red flags that could pop up depending on what's deposited, what's taken out, and commingling those accounts to try to calculate qualifying income. So make sure you prepare those, get your bank account set up the right way, your entity name, everything like that. And really, another thing that holds people back is people that talk to traditional lenders that don't understand business owners. I'm a business owner myself. My entire bloodline were business owners. I speak the language. I connect with you guys out there. Let's help you guys invest in real estate, even though your tax returns don't state that. Let's continue helping you write off as much as possible, but then still also set you up for success to buy real estate. Let's help you grow your wealth outside of your business and buy a multifamily perhaps. Okay, so the bigger picture here is there's a wealth shift happening. The one side of it is pay Uncle Sam, go their traditional route, low down payment, more favorable interest rates. The wealth shift is continue making income, continue bringing in cash flow, write off as much as possible, and being able to invest in real estate while writing off money. Okay, so the bigger picture here is the wealth shift between the two different sides, but also renting versus owning as a business owner. There's a lot of tax loopholes out there where you can leverage your income and buy more real estate. You know, real estate, as you guys know out there, is a long-term game. Homes go up in value year over year. They will continue to do so. As the dollar gets weakened, real investments like real estate are going to continue thriving. Using real estate as a tax-efficient wealth tool is imperative, all right, as a business owner. Short-term rentals, I'm not a CPA or a tax strategist. I have a lot of good connections there. Would be honored to connect you with those people, but it's a massive tax-efficient wealth tool to help you continue growing your wealth within your business, and then also just all the wealth gaining and long-term play of real estate. When it comes to this strategy, the approval strategy matters more than income level. So talk to someone like myself that truly wants to help you grow, help you win, have success out in the real estate market as a business owner, self-employed, freelancer, 1099 worker. You deserve to own real estate, okay? You do not have to go the traditional route. Let's allow you to get out in the market, invest in a primary, buy a second home, buy investment properties, build a portfolio of real estate, and truly build generational wealth for your family. So entrepreneurs shouldn't have to choose between running a smart business and building real estate well. So if your income is real, but your tax returns don't show it, there is still a path for you, okay? Thank you for watching this video. If you like this video, comment, subscribe, share this with a friend. It would mean the absolute world for me. Thank you for watching.